In the dynamic world of stock markets, the temptation to pick stocks based on gut feelings or emotions is ever present, and this is how many people buy and sell stocks. Let me show you an example. However, seasoned investors understand that relying on sentiment alone can be a risky endeavor. Here at Valuelytics we explore the advantages of intrinsic valuation methods, such as the discounted cash flow model, Graham's valuation, Peter Lynch's dividend-adjusted fair value, the comparable company analysis, and the dividend discount model over the more whimsical approach of choosing stocks based on feelings. Focus on fundamentals. Intrinsic valuation methods, particularly DCF, involve a meticulous analysis of a company's fundamentals. This includes examining its projected cash flows, growth rates, and risk factors. Unlike emotional decision-making, this approach grounds investment choices in tangible financial data. DCF values a stock based on its future cash flows, fostering a long-term mindset. Emotional decisions often lead to short-sighted moves, whereas intrinsic valuation methods encourage investors to consider a stock's true worth over time. Benjamin Graham, the father of value investing, introduced the concept of the margin of safety. His valuation methods focus on buying stocks when they are undervalued, providing a buffer against unforeseen market downturns. Emotion-driven choices often neglect this crucial element, exposing investors to unnecessary risks. Graham's approach relies on quantitative factors, such as earnings and book value. This method ensures a disciplined and systematic evaluation process, reducing the influence of emotional biases that can cloud judgment. Peter Lynch's method involves adjusting fair value calculations based on dividend yields. This holistic approach incorporates income generation into the valuation process, offering a more comprehensive picture of a stock's potential. Emotional decision-makers may overlook the importance of dividends in the overall return on investment. Lynch advocates for understanding the business behind the stock. This deeper level of analysis prevents hasty decisions based on surface-level emotions and encourages investors to evaluate a company's competitive advantages and growth prospects. The comparable company analysis involves comparing a company's valuation metrics with those of similar firms in the market. This method provides a benchmark for understanding a stock's relative value within its industry, allowing investors to make informed decisions based on industry standards rather than emotional impulses. The dividend discount model values a stock based on the present value of its future dividend payments. This approach is particularly useful for income-focused investors seeking a steady cash flow. Emotional decisions may overlook the significance of a reliable income stream in a stock's total return. These intrinsic valuation methods provide a systematic and rational framework for stock selection. By grounding decisions in quantitative data, long-term perspectives, risk mitigation principles, and industry benchmarks, investors can transcend the pitfalls of emotional decision-making. While feelings may play a role in market sentiment, relying on a well-structured intrinsic valuation approach offers a more reliable path to successful stock investing. Keep in mind, achieving success in investing doesn't hinge on emotional impulses but rather on adopting decisions grounded in data with a long-term perspective. Before we conclude, if you're keen to delve further into the intricacies of these valuation models and desire convenient access to the spreadsheets housing these intrinsic models, they're readily accessible on our Patreon page. Your support not only fuels the creation of valuable content but also grants Patreon supporters exclusive entry to resources that can significantly enhance your investment journey. If you have any questions or if there's a specific valuation method or stock you'd like us to explore in our next video, drop a comment down below. We love hearing from you.